They won't announce it on the news. But behind closed doors, the most powerful nations on earth are quietly preparing for a world where trust in paper money vanishes. Central banks are no longer playing by the old rules. They're hoarding gold, real, physical gold, in amounts not seen since the Cold War. This isn't diversification. It's preparation. A silent battle is unfolding, one where vaults matter more than votes, and whoever holds the gold writes the rules. In the 1950s, the US and Soviet Union fought to control ideology and arms. Today, it's about reserves and redemption. And if your country is left holding paper when others hold gold, the consequences won't just hit markets. They'll hit you through inflation, declining living standards, and lost sovereignty. The secret war has begun, and you were never meant to notice. For decades, the global financial system ran on trust in the dollar, in institutions, in promises made on paper. But when that trust begins to erode, nations don't panic publicly. They reposition quiet. That's exactly what we're seeing now. Central banks across Asia, the Middle East, and even parts of Europe are buying gold at an unprecedented rate. China leads the charge, month after month adding tons to its official reserves, while experts suspect its true holdings are much higher than declared. Russia, already cut off from much of the Western financial system, has openly tied its monetary strategy to gold. Even emerging economies like Turkey, India, and Brazil are shifting away from dollar-based assets and quietly reinforcing their gold vaults. This isn't random. It's strategic. Because these countries see the writing on the wall, the era of uncontested dollar dominance is coming to an end. And in a world where trust in fiat currencies weakens, only hard assets like gold can serve as a final backstop. Historically, every major empire has faced a similar reckoning. When debt spirals out of control and geopolitical alliances fracture, money backed by nothing becomes a liability. The United States used gold to assert dominance in the post-World War II order, forcing allies into the Bretton Woods system. But now the same game is being reversed. Instead of exporting dollars, the U.S. finds itself defending a currency fewer nations want to hold. This shift isn't theoretical. It's already happening. And for the average citizen, it means the rules of global trade, currency valuation, and even the price of basic necessities are being rewritten without their consent. The quiet rush to gold isn't a hedge. It's a signal, a warning, a preparation for what comes next. The modern world was not built on gold. It was built on promise. After World War II, the United States convinced the world to adopt a new system where the dollar, not gold, would be the bedrock of international finance. This system, known as Bretton Woods, worked only because the dollar was redeemable for gold. But that promise was broken in 1971, when President Nixon closed the gold window. From that moment on, the global economy entered a new era, one of fiat money, floating currencies, and ever-growing debt. For a while, it worked. The US dollar, backed by military strength and oil pricing mechanisms, retained its dominance. But over time, trust began to wear thin. As the US printed more money, ran deeper deficits, and weaponized its financial system through sanctions and asset freezes, rival nations began asking a simple question: what happens if we are next? That question sparked the beginning of a quiet, coordinated shift, a modern Cold War, not fought with bombs but with bullion. Central banks across the non-Western world started to accumulate gold again, not just as a diversification tool, but as an insurance policy against a dollar-based system that seemed increasingly unstable. Between 2010 and 2024, global central bank gold purchases surged to levels not seen since the 1960s. And the motives were clear: distrust of the dollar, fear of sanctions, and a desire to break free from Western-dominated institutions like the IMF and World Bank. China in particular has been remarkably opaque. Its official gold reserves are updated only occasionally, but satellite data, customs reports, and insider leaks suggest it has been stockpiling gold through state-owned banks, secretive overseas purchases, and domestic mining. Russia has done the same, especially since 2014, when Western sanctions over Crimea accelerated its move out of U.S. treasuries and into gold. This behavior mirrors Cold War dynamics. Back then, the Soviet Union used gold to quietly settle international debts and build economic alliances outside the dollar system. Today, China and Russia are playing a similar game, only this time they're not alone. Dozens of emerging economies have joined them, driven by inflation fears, geopolitical instability, and a growing sense that the current system is rigged against them. These nations aren't buying ETFs or paper gold. They're demanding physical delivery. Vaults in Singapore, Istanbul, Abu Dhabi, and Beijing are quietly filling up. Switzerland, long a neutral ground for gold transactions, is seeing a rise in untraceable shipments. And the West? It's largely ignoring the signal. Western media focuses on stock markets and tech IPOs, while beneath the surface, a foundational shift is underway. This movement is not only strategic, it's existential. For many governments, gold is the only asset that cannot be frozen, blocked, or devalued by foreign powers. It is apolitical, borderless, and immune to printing presses. In a world where geopolitical conflict is no longer confined to battlefields, but plays out in cyberspace, shipping lanes, and financial networks, gold offers something that dollars and euros cannot: true sovereignty. The accumulation of gold is thus not just an economic decision. It's a political one, a national security measure, a declaration of independence from a system many view as unjust, unpredictable, and unsustainable. The implications are enormous. As more countries withdraw from dollar-denominated trade and settle transactions in local currencies or gold, demand for U.S. debt weakens. Treasury markets become more volatile. The Fed loses leverage over global liquidity. And inflation, once a distant concern, becomes an unavoidable reality. Citizens in countries with weak currencies will suffer first, as the cost of imported goods soars. But even in the West, standards of living will erode as the dollar's purchasing power declines. The era of cheap goods and easy credit, underwritten by trust in the dollar, will not last forever. And when that trust fades, there is no soft landing. This story is not speculative. It's unfolding in real time. Saudi Arabia is pricing oil in yuan. BRICS nations are creating alternative financial systems. Gold is being flown, shipped, and stored in fortified bunkers, out of reach from the grasp of Western legal systems. Even Germany, a U.S. ally, repatriated much of its gold from New York and Paris back to Frankfurt. They say it's for logistical reasons. But behind that phrase lies a deep fear. What if the rules change overnight? And here's the chilling truth. History says they will. Every empire that has relied on financial dominance to maintain control has eventually faced a reckoning. The Romans debased their currency into collapse. The British pound lost its global reserve status after World War II. And now, with soaring debt, political division, and global pushback, the U.S. faces its own monetary moment of truth. The dollar will not disappear overnight, but its uncontested supremacy already has. And gold, once dismissed as a barbarous relic, has returned to the center of power. This isn't just a story of central banks and vaults. It's a story about you. Because in a world where gold matters again, your country's access to it will shape your future. A nation without reserves is a nation exposed. Its people will pay higher prices, face economic instability, and lose control over their destiny. When currencies collapse, savings are wiped out, wages become meaningless, and governments lose legitimacy. In such a world, gold is not just a store of value, it is a firewall against chaos. The secret Cold War over gold is not theory. It's strategy. It's already in motion. And by the time it makes the headlines, it will already be too late. In 1950, the U.S. controlled over 70% of the world's official gold reserves. Fort Knox wasn't just a symbol, it was the foundation of global trust. Nations held dollars because they believed they could exchange them for gold at any time. That belief, that link, was the keystone of American dominance. But by the late 1960s, cracks began to form. Wars in Vietnam, massive domestic spending, and rising inflation pressured the U.S. economy. Foreign nations, especially France under Charles de Gaulle, began redeeming their dollars for gold. It was a vote of no confidence. And by 1971, the U.S. could no longer uphold the illusion. Nixon slammed the gold window shut. The world entered the fiat era, but not without consequences. What followed was 4 decades of financial experimentation. Without the anchor of gold, governments could borrow and print with unprecedented freedom. This led to booms, busts, and asset bubbles, but also incredible expansion. The dollar remained dominant because there was no alternative strong enough to challenge it. But that was then. Today, debt levels have surpassed anything seen in the past century. The U.S. national debt has exploded past $34 trillion, with no sign of slowing down. Simultaneously, the global landscape has shifted. China is now a peer competitor, not just militarily or economically, but monetarily. And Russia, sidelined from the Western system, has become a pioneer of financial independence. Both nations, along with dozens of others, have chosen gold as their silent protest. Gold doesn't carry the political baggage that dollars do. It doesn't rely on swift systems, rating agencies, or the whims of foreign central banks. It simply exists, untouchable, incorruptible, and finite. That's what makes it so powerful. And that's why central banks are now accumulating it like survivalists stockpile canned food before a storm. This isn't about return on investment. It's about insurance, a last resort, a foundation to rebuild from if the current order collapses. This shift can be tracked in real data. In 2022, central banks bought more gold than any year since 1950. In 2023, they bought even more. And by 2024, many refused to even disclose how much they purchased. That silence is strategic. No nation wants to spark panic. But the pattern is clear. The more unstable the global system becomes, the more gold disappears from the open market into sealed vault. Meanwhile, the general public remains in the dark. Media coverage focuses on cryptocurrencies, tech stocks, or celebrity scandals. The real moves, the ones that signal systemic change, are buried in footnotes and trade data. But the consequences won't stay hidden forever, because at some point a tipping point will arrive. It could be triggered by a major geopolitical event, a sovereign debt default, or a breakdown in global payment systems. And when that day comes, the nations with gold will have leverage. The ones without it will face hard choices. This is not about nostalgia for the gold standard. It's about preparing for the end of an era where trust in fiat currencies was taken for granted, an era where the dollar could act as both a weapon and a safety net. But the more it's used as a weapon, through sanctions, restrictions, and unilateral controls, the less it can serve as a trusted neutral currency. Nations are noticing, and they are acting quietly, efficiently, without seeking headlines or conflict. They're simply preparing for a world where gold, once again, speaks louder than paper. And what does that mean for the individual? It means the global economic rules you were taught no longer apply. Your savings, your salary, your investments, everything relies on the assumption that currencies will hold value. But value is perception. And when nations stop perceiving the dollar as the safest bet, the ripple effect will be enormous. Inflation will rise. Trade imbalances will worsen. Currencies will diverge. And for ordinary people, life will get more expensive, while real wages stagnate or decline. The hidden Cold War over gold isn't just a war between empires. It's a war over the future of money itself. And unless you're watching closely, you'll only see the fallout, not the warning signs. Imagine waking up one morning to find your national currency devalued overnight. Your salary buys half of what it did yesterday. Imported goods double in price. Fuel costs spike. And savings that once felt secure now evaporate with every passing week. This isn't a dystopian fantasy. It's the historical pattern of every monetary empire in decline. And gold has always played the same role in that cycle. The fallback, the insurance, the real money when all else fails. The reason central banks are hoarding gold today is not because they're gold bugs or speculators. It's because they see the fragility of the system they helped build, and they no longer trust it. For decades, the US dollar was backed by confidence. Not gold, not productivity, but belief in the system. But confidence is fickle. And once it cracks, no amount of speeches or stimulus can restore it. This is why countries like China are not just accumulating gold, they're building entire systems around it. Cross-border payment systems, gold-backed trade agreements, bilateral pacts that bypass the dollar entirely. It's not about replacing the dollar tomorrow. It's about preparing for its eventual irrelevance. A parallel financial world is being built in silence, and gold is its foundation. Meanwhile, Western policymakers dismiss these moves as marginal or irrelevant. They cite market liquidity, bond depth, and institutional inertia. But those arguments ignore the most important variable, psychology. When people, especially governments, believe the current system is no longer fair, they stop playing by its rules. And that's exactly what's happening. Gold is being used not just to diversify reserves, but to insulate economies from Western financial pressure. It's a shield, a message, a backup plan in case the current order collapses under the weight of its own contradictions. And there are many contradictions. How can a reserve currency be printed infinitely, yet retain value? How can a nation enforce sanctions on half the world and expect the other half to keep trusting its money? How can debt rise forever while inflation is declared transitory? These aren't technical questions, they're existential ones. And more countries are arriving at the same conclusion. The game is rigged. The dollar is no longer neutral, and gold is the only asset that doesn't lie. This trend will not reverse. If anything, it will accelerate. Because once trust is broken, it rarely returns. The next financial crisis, whether triggered by debt, war, or recession, will likely expose just how unprepared most countries are. Those without gold reserves will face currency collapse, capital flight, and social unrest. Those with gold will not be immune, but they'll have a fighting chance. A tool to stabilize. A way to rebuild. That's what this is really about, survival. And for the average person, the lesson is stark. You may not control central bank policy. You may not have access to bullion vaults. But you do live in a system shaped by these forces. When your country holds gold, it holds leverage. When it doesn't, you become more vulnerable to inflation, to scarcity, to geopolitical chaos. The secret war over gold isn't just about governments. It's about your standard of living, your savings, and your future. Whether you see it or not, you're already a participant. For most people, gold feels distant, something stored in dusty vaults, traded by billionaires or flaunted as jewelry. But that perception is dangerously outdated. Gold today is no longer just a symbol of wealth. It's a geopolitical weapon, a reserve asset, and increasingly, a line of defense against financial collapse. And while individuals can't print money or set interest rates, they will absolutely feel the consequences of a world where gold once again becomes the cornerstone of monetary power. Because when your government lacks gold, it lacks options. And when options disappear, the costs fall on you. Think of gold like a country's immune system. In stable times, it may seem unnecessary. But when crisis hits, when inflation spikes, currencies crash, or trust evaporates, gold becomes the last line of defense. It can be used to settle trade when credit lines dry up. It can stabilize collapsing exchange rates. It can restore confidence when investors flee. Without it, a country must beg, borrow, or print. And each of those paths comes with devastating consequences for its citizens. History is brutally clear on this. Countries without hard reserves during crisis endure the deepest pain. The current shift isn't about theory or fear. It's about preparation. China is not buying gold because it enjoys shiny rocks. It is buying gold because it knows that the next global monetary reset will favor those with hard assets over paper promises. And when that reset comes, whether triggered by war, a banking crisis, or a loss of confidence in Western debt, the countries with full vaults will set the terms. Everyone else will have to follow. If your country isn't preparing, you must ask why. And more importantly, ask what that means for your future. Because when this silent war over gold reaches its breaking point, it won't just affect governments or billionaires. It will hit your wallet, your job, your food prices, and your freedom to choose. Gold is no longer ancient history. It's tomorrow's power. The world is changing, but not in ways you're meant to see. While headlines distract you with stock rallies and tech breakthroughs, the real power moves are happening out of sight, behind closed doors and sealed vaults. A silent financial war is already underway, and gold is the battlefield. This isn't about investment trends or market cycles. It's about sovereignty, about which nations will lead in the next era, and which will collapse under the weight of illusions. The central banks know. The insiders know. And they're acting while the public sleeps. Gold has no opinion, no agenda, no passport. That's why it's trusted. And in a time when trust is breaking down, between nations, between currencies, between people, gold remains. For centuries, it outlasted empires, regimes, and revolutions. And now, as the fiat experiment begins to crack, gold is quietly reclaiming its role. Not loudly, not publicly, but decisively. So what can you do? First, open your eyes. Understand that what's coming is not a sudden collapse, but a controlled reset. A reshuffling of power based not on ideology, but on real assets. Then demand accountability. Ask whether your leaders are preparing your nation for the next monetary era, or pretending it'll never arrive. Because when trust vanishes and currencies fall, it won't be the headlines that hurt you. It'll be the prices in your supermarket, the interest on your loans, the vanishing value of your savings. The secret Cold War over gold isn't coming. It's here. And the longer you ignore it, the greater the cost. Wake up. Watch what they do, not what they say. Because in the next crisis, gold won't just be valuable. It will be power.